we've had a lot of conversations in the past 6 months with other custodians that weren't necessarily working with us, that had other solutions in place, and that are thinking about, onboarding onto Ledger to be part of trading because they understand, the fact that there is a market need and a market demand, and so they want to be able to satisfy it in whatever way. And at the end of the day, I mean, I would think that pretty much every major custodian, save maybe a few very, very large ones in the US that will not name, will be part of TradeLink one way or another.
Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, we have a very, very special episode, and I'm very happy to welcome Sebastian Badalt, who is the Vice President of Ledger Enterprise. Sebastian is here to explain the security process around institutional trading. So I'm really happy to have someone with his expertise here. Sebastian, how are you? Thank you for coming on the show.
I'm great. Nice to see you, Ricardo.
Yeah, likewise. Sebastian, as I understand it, Ledger is partnering with Bitfinex and several other exchanges to launch a enterprise trading solution. I guess, like, for those that aren't institutional traders, can you kind of break down the dynamic that institutional traders are dealing with and like how Ledger helps them solve security issues around moving large amounts of crypto assets?
Sure. I mean, I think one of the big issue came really a few years back with the FTX collapse, which really put the fear of God in a lot of traders. And I think that there's this idea that you really don't want to, put yourself in this kind of a risk. And so, when it happened, it was really a come to Jesus moment for us as well, and thinking, wow, we actually have a solution to help this from happening, and that would be, off exchange trading. So we really started getting to work on the solution pretty much right after. It took a little while because we had to figure out the right ways to do it, and we're now taking it to market. And we've been talking to a lot of asset managers about the idea, right? Because a lot of times, like, what we put out into the market is really based on specific customer demand, like people that we're talking to and what they need, and we try to build products that are going to be and services that are going to be really answering a specific need that the customer has expressed. And so, after that, we were thinking, okay, so what is the best way? And we felt that off exchange trading, where, there would be no counterparty risk for asset managers, would really be the way to go. So we worked with Kamainu to start because they're a custodian that we have been working with for many years, that have been a Ledger Enterprise customer since pretty much the beginning of Ledger Enterprise. So we're very close to them. So it was easy to start build a solution, and then try to plug in exchanges. And then Bitfinex was one of the first ones that we reached out to, and that was definitely interested in the idea. And now we're rolling it out. And I think what's very important also to see and understand, and that's very specific to Ledger, is that we really see ourselves as a platform, right? Like all we do is really bring a layer of security to the ecosystem, right? We're not gonna produce the trades. We're not a custodian. We're just really bringing that layer of security. And the idea is that for the platform to be really open to every custodian in the world, every asset manager, every exchange, and to really fluidify the whole process, right? And to fluidify, and then to obviously make it as secure as possible. So that's really the way we're thinking about it. I think it's very similar to the way that we've built out also our consumer business. So I think we're taking a lot of the lessons that we've gone from building Ledger Live over the past 5 years, which also is kind of like the only platform where you can have access to all these different services. So we're now, as we know, the development of the ecosystem, especially over the past 6 months, and I think going forward in the next years or so, since the ETF, since everything that's been happening in the US and everywhere else, is going to be driven a lot by institutions. We need to have the ecosystem needs to have the right products for those new joiners and those new institutions that are coming on board.
Well, that sounds very, very interesting. A few moments ago, you mentioned a term that is very interesting. You said off-exchange trading. How exactly does that work for Can you give like a definition or an explanation for people that don't trade that way?
Yeah, I mean, so basically, the it's quite simple. The idea is that instead of having whatever assets you're going to pledge directly onto the exchange, where if there is an issue with the exchange, then whatever you've pledged is at risk. You're pledging your the 10 million, 50 million, whatever million or hundreds of thousands of dollars that you wanna invest to a custodian that basically
Mhm.
will signal to has a relationship with the exchange, of course, and tell the exchange, I'm holding this money. I want to execute that trade, and then the money never actually reaches the exchange. Is just settled off exchange, and so there's at no moment is the money at risk on an exchange and potentially have a vector of attack, etc., because it's safe within the custodian. And I think that the first thing that it does is that it guarantees full security. As
Mhm.
long as you work with a regulated custodian, you know that you're fully secure. And then I think it also brings a level of flexibility because once you've created that pledge, if the custodian is plugged into multiple exchanges and you want to trade in different derivatives or different kinds of markets, you can pledge to the multiple exchanges from one place instead of having to do a bunch of different back and forth. So there's the security piece, which is huge. There's the flexibility piece, which is the second really important one. And I think that when you think about it, even as a user today, you'd much rather have one stop shop, right? Like you'd rather go to that. That's why there's big supermarkets, right, where you can buy everything that you need instead of having to go to the butcher and to the cheese shop and to the et cetera, et cetera. That's why these things that convenience is something very big. And in trading, I think it's very important because it's a gain of time and it's again in money as well because by having everything settled into one place, then you can actually minimize the number of transactions. And some of the asset managers that we've worked with on developing the solution, I've seen their transaction costs go down by 80%. And as we know, this is a game where every cent that you are able
Mhm.
to shave, is money earned. And so I think it's really important. So if you summarize, go back to this idea of security number one. It's our DNA. That's what we know how to do, and that's what we're known for. And we're the best in the world at security in that space. Flexibility because we are a platform, and then helping our customers, make more money and basically have a solution that is just more affordable and where they're able to cut costs.
Okay, amazing. Thanks for that explanation. So I guess like my next question would be, when do the trades actually settle? Like say I end up like losing some money to the exchange and I need to like shift some Ethereum or whatever to their balance. Like how does that process work? And then how does Ledger fit into this? Like these custodians are using Ledger's infrastructure in order to place these orders and stuff with the exchange?
Yeah, so the settlements are done. I mean, that's really specific, I think, to the relationship between each custodian and each exchange. So we're trying to make it as quick as possible. So it could be once a day, but it could be once every couple of hours, etc. And it depends also
Mhm.
on the needs of the specific asset manager. So there is a relationship. There's a contractual relationship between the custodian and the exchange. It's also different based on the exchange, but we're trying to make it and that's also the other things that we try to develop in terms of the product is to make it as fast as possible because we also know that obviously speed
Is
is
very, very important.
in that space. And then yes, like all the custodians that are going to be integrated onto TradeLink will be using Ledger Enterprise, and that's really where we do more because you actually created the whole solution that creates the link between the three parties. But at the heart, if I go back, so that's I guess the flexibility part is TradeLink. The security part is Ledger Enterprise, which is really our first product, right? And that's
Mhm.
what's being run by the custodian. So that's why we started with custodians that were already customers of Ledger. But it's been interesting because um, we've had a lot of conversations in the past 6 months with other custodians that weren't necessarily working with us, that had other solutions in place, and that are thinking about onboarding onto Ledger to be part of TradeLink, because they understand, the fact that there is a market need and a market demand, and so they want to be able to satisfy it in whatever way. And at the end of the day, I mean, I would think that pretty much every major custodian, save maybe a few very, very large ones in the US that will not name, will be part of TradeLink one way or another. And I think that, because it will be the place where, again, because it's the idea of platform, we're the only ones who don't, the other solutions in the market are often linked to existing custodians, which means that there's like a limit to what you can do there, or at least like in the perception, possibly. If you're an existing custodian, do you want to onboard on another custodian? Probably not. And a lot of custodians actually like building their own solutions. But when you think about it, as an asset manager, do you want to have to have 3, 4, 5, 6, 7 different relationships? So do you want to have everything integrated? It's just much easier to have like one dashboard to kind of like rule them all. So that's kind of like one of the reasons. And then again, like the idea of security, I think is really at the heart again of what we do, and we're definitely known for this. We've we launched a new hardware for consumers back in July called Ledger Stacks, and we're migrating our Ledger Enterprise users to Ledger Stacks, so they'll be able to use the best of Ledger on the enterprise side and the best of Ledger on the consumer side as well, and also especially be able to clear sign their transactions, because we know that clear signing becomes more and more important in the space that we're in. What happened a couple of weeks ago with Bybit showed us that we really have to be super careful as an ecosystem to do things right and to clear sign, because clear signing, if you're clear signing your transactions, what you sign. And this is something that we've been pushing as a company for many months. And we're definitely getting a lot of traction on it, because people understand more and more how important it is. And with the Ledger Stacks, which has a full screen, it's e-ink, etc. It's just so easy to look at your transaction, be able to see whether it's exactly what you think you're signing, and that you're sending your ETH to the right person, and not to some blind contract that you don't know, where you could actually like have an issue and be compromised. And we don't want to compromise on security, and clear signing is really the best way to never compromise.
Okay, yeah, I wanted to get into the Bybit hack. Like, for people who aren't technical, can you kind of explain how the exploit happened, and then how Ledger would totally prevent that from being able to happen?
So I mean, I'm not an engineer, so I won't be able to explain technically extremely well the way that it happened. But my CTO Charles Guillemet did an amazing job doing it. So maybe we can link
just a high level overview. It doesn't have to get into the granular details.
Basically, it was a mix of a transaction that was blind signed. So the person who blindsided the transaction, didn't know what they were signing. But then there was a real exploit behind it, which was exploiting the safe ecosystem, which Bybit was using, and they basically put in like a fake transaction in there, which was something for like it was maybe for like 40,000 ETH or something like that. But then once they got in, they drained the whole wallet, and the wallet had 400,000 ETH in it already. Yeah. So that was, I mean, it was, and we know obviously who did it. It was they also, the other thing that they did, which was incredible, is that they the loop that they found, the vector attack that they used in Save, they actually patched it after they left to make it seem like nothing had happened. But when the forensics started like looking at what had happened, they were able to discover it pretty quickly. So they were trying to hide their tracks, because obviously right now people are also trying to freeze these funds. There are all these discussions happening about how do you get it back, etc. That's another problem. But I think at the end of the day, there are if Ledger Enterprise had been used, or clear signing had been used, especially if Ledger Enterprise had been used in that setup, this would have never happened. 100% sure. So I think that we obviously we never like to see these things happen, because I think they're bad for the ecosystem. What's really great is the way Bybit has reacted. I think they showed a lot of transparency, and safe as well, right? Both parties, did a really good job explaining, sharing all the forensics report, etc. I think that it showed like so much maturity from the industry, and that was really, really great to see. The other thing that happened, which was really great, is that Bybit was able to, like, nobody lost a dollar, except for Bybit. Bybit lost $1.5 billion, but all their customers were made whole. Like, nobody, lost money on the deal except for Bybit, and so that was also a bit different from what happened in past issues. But the other reality that we have to come to terms with is that hackers, are gonna get, there. And the reality is this, right? Like, the more there is to steal, the more you're going to put in, to go and get the money, right? So the fact that the ecosystem as a whole has grown a lot, etc., makes it more of a target, and the level of hacks is going to become more and more sophisticated, for sure. So it's not going to get better; it's going to get worse. And the reality is that, like, because it's going to get worse, you need to be more and more, aware of the importance of, putting in place the right solutions to make sure that it doesn't happen, right? And I think that it's, to me, it's going, and we've been having discussions for the past few weeks since it happened with a lot of people that we had talked to in the past and said, no, I think we're good, we have our own solution, and who are now coming back to the table saying, you know what, guys, maybe we really need to implement something different, and something like Ledger Enterprise. So I think that it's sometimes you need these wake-up calls. We're still a very young industry. We're still learning as we go. But I think that these moments can be good moments if we drive them the right way, and if we put in place the right solutions. And going back to the sophistication of attacks, it's always the same. It's kind of like, the between car thieves and car alarm makers, right? Like, car thieves get more and more sophisticated in trying to, like, get into the cars, and so car alarm makers have to get better and better with their technology, and that's what we're doing, and that's why you need specialists who live and breathe this stuff every day and really have this incredible focus on the security.
Yeah, privacy and security are both like a never-ending battle. Like, you have to stay vigilant. You have to constantly be changing what you're doing and staying up to date, or else you're going to be exploited, or your data will be at risk.
Yeah.
So I definitely understand that.
Yeah, and that's the case for consumers. I think more and more, and maybe consumers don't care as much, but here, like, you have a level of responsibility that's even higher, because you're talking about, in this case, billions of dollars. But if we're going back to our asset managers and institutional trading, even, like, a few millions, etc. And a lot of times, what are you're going to be trading other people's money as well. So, or LPs or GPs or whatever. And so you have to be super aware of what you're doing. So I think that, like, as a whole, I think it could be a good thing, because it could be, a way for people to really start doing it right. And hopefully, we won't be talking about these things in the future. I really hope that I'm sure that, like, in the 1800s in the US, there were bank heists every other week. But when do you hear about a bank heist today? I mean, you hear about other issues linked to banks, obviously, but not about people, like, going into a vault, because the vaults, doesn't happen anymore. So I think that we need to get there with crypto, and we're learning as we're doing, but tools exist. I think that's what matters, and what people need to understand. There are solutions that will provide you with what you need to make sure it doesn't happen to you.
Yeah, for sure. Sebastian, I know you've been focused on rolling out this TradeLink with centralized exchanges, and we've talked about problems with centralized exchanges like FTX mismanaging funds, or the Bybit hack, where an attacker will attack it and steal the money from the wallet. But how about DeFi? Because a lot of these exploits that are in very, very big amounts have been from, like, bridges and decentralized exchanges and things of that nature. How would TradeLink help, like, an institutional investor trying to dabble in Web3?
I mean, I think that's probably the next step that we definitely need to look into. But I think that, and possibly, like, and for sure, what I like, obviously, is that the decentralized ethos is very much at the heart of things that happen in the crypto space. I think that's what Bitcoin is in a lot of ways, and that's what a lot of the idea of what we're trying to put into markets are. So I think the DeFi will I mean, it'll probably be like the next iteration. I think right now we're focusing on centralized exchanges because that's where the issue was in the first place. And I think that we want to take that to market and make sure that we get it right, and then we'll think about new iterations in the future. But there'll definitely be opportunities for DeFi in the future for sure.
Okay, awesome. And then with TradeLink, like how soon can institutions expect to implement it as a solution?
I mean, right now, if you working with Komainu, if you're working with Bitfinex, you can. We already have asset managers like doing trades and everything, so they should give Komainu a call, give Bitfinex a call, and give us a call, and we'll set them up. I think one of the things that's really interesting is that if you're an asset manager, what they can also come to us and tell us the setup I would want is to work with this custodian and work with this exchange, and the idea is that you can really create your own private network, right? Like, so it doesn't. I mentioned Komainu and Bitfinex because I'm talking to you guys obviously, but also because you're the first ones that we integrated, and you're aware like the rails are working, etc. But down the line, we can do it with anyone, and I think that that's really what's interesting for asset managers, because and we see it in discussions that we have with them, right? Like some of them want to hit specific markets, some of them have preferred custodians that they want to work with, but at the end of the day, anything is possible, right? Like, and the thing is that it's what I think is very, when you talk about partnerships, you always talk about this idea of like win-win, and is that true? Is it not true? Sometimes it is, sometimes it's not. I think in this specific case, it's like a win-win-win, because I think that everyone in the ecosystem, from the asset manager to the custodian to the exchange, benefits. The asset manager gets what I told you before, the security, the flexibility, and the lower costs. The custodian gets new inflows into their custody, which allows them to actually make more money, because at the end of the day, because TradeLink, I forgot to mention, but is for an asset manager, is a free service, right? It doesn't cost them anything except for the money that they're going to put with the custodian. So they'll pay the custodian, they won't be paying Ledger. And then for the exchange, it creates new inflows, right? Like there are a lot of asset managers that we're talking to that are that just could not, from their bylaws or from their board, etc., leave money on exchange. And so right now they're stuck, like not being able to like do some of these transactions. And this is a way for them to do these transactions, which means that for the exchange, they're going to get an inflow that they wouldn't have gotten otherwise. So I think everyone wins in that setup, which is really amazing. And I think that, at the end of the day, the asset manager also wins in ease of use, because it's like really simple, and we can't do a demo here, but there's one online that we can also link to. But the ease of using the platform is incredible. It's like it's actually a really simple and easy platform, and I think that as a trader or as an asset manager, I would want to have that level of ease of use. So I think that's another big thing.
With the Bitfinex integration specifically, what can Bitfinex customers expect from the integration?
I mean, I think that what I like is that and I've done this my whole life in different platforms that I worked with and for, is that when you're the first to go, it's a bit harder, because like you have to debug and talk about, oh, this could be better and this could be better, this is missing, etc., etc. So you have to do a lot more work, but then you have a leg up in some ways on the competition because you're the first one to do it, and so you'll always have like a little bit of an advance. So what I'm expecting is that anyone wanting to trade on Bitfinex using our solution will have a very will always have a little bit of an advantage in some ways, because you'll have been the first. So I think that's a big thing, But otherwise, the idea will be to have the smoothest, fastest, and overall best experience that you could have trading in this safe environment.
Okay, amazing. And then I guess like you're aware of this, everyone's aware of this, but in the last few months, it seems like the US government and other governments have dramatically like repositioned their stance on crypto and regulation and have become a lot more friendly towards the industry. With the advent of like this more positive response from regulators and governments, like what kind of potential do you see for institutional trading to enter the digital asset industry?
I think it's going to be huge. I mean, I've seen it already over the past few weeks. I've been I was in the US at least 3 times in the past couple of months. I'm going back next week for DAS. And yeah, you've seen it's interesting because I was there in October, so before the election, and then I was
Mhm.
there in November, and I was there in January, February, and now in March. And you really see the evolution in the space, the number of people that are there, the discussions that are happening, the level of optimism, and it just feels really good for the industry to go from feeling like you're being kind of chased down uh, and,
Mhm.
and and trying to be kept from doing what it is that you're doing and innovating, etc., to feeling that you're being supported and helped, right? And it's really like a 180 degrees change, right? The SEC dropping all the different lawsuits that they were going after crypto companies is huge. I mean, and it's not, and it's huge because it also means that you're going to be able to focus your energy somewhere else instead of like fighting. You're going to be using your energy to build, right? And I think that that's what we need as an ecosystem, is to build, to continue building. I think we've built a lot, and we need to continue building. And then on the institute, especially when you look at what's happening on the TradFi side, between like BlackRock's ETFs and the $60 billion that have been poured into that, but also like when I hear, um, you know, Ken Griffin of Citadel, who has been, who doesn't have a euro. Citadel does 25% of global trades, right? Like 25% of all trades are done by Citadel. So obviously, it's one of the biggest players in the space. They have $0 in crypto today. But when Ken Griffin was interviewed at the Dealbook Summit back in November, post Trump election, he said, "I should have invested in Bitcoin. As an investor, I should have done it. I made a mistake." And now, a few months later, he's talking about Citadel being a liquidity provider for exchanges. I mean, that is a huge shift, right? And then the other thing is that, I think that the ETFs was, if you think about it, like it's a bit of a being, going from holding an ETF to actually holding Bitcoin or any other cryptos is really going from being on a tricycle to being on a two-wheel bicycle. Uh, and I think that anyone who bought the ETFs has seen like a very positive return. But you're barred from trading on the weekend. It's interesting to see also that, I don't know if you saw this, but that the Nasdaq has now announced that they're going to be trading 24. It's not 24/7. It's 24/5. So 24 hours for 5 days. But still, you won't be able to trade on the weekend. So if you're holding
That's
Bitcoin,
very interesting. I
yeah,
didn't see that.
but
Yeah.
but and it's super linked to crypto. It's for sure
Yeah.
linked to crypto. But the reality is that if you're holding the ETF, you still won't be able to trade on the weekend. If something major happens and that crashes the price of Bitcoin, and you're holding a big bag, you're not going to be happy to not be able to like act on that. So I think that we're going to see a lot of the people that have invested in the past 6 months, still probably hold some ETF, but also start to diversify and actually hold crypto directly, and that's going to be a big shift. And I mean, I don't know, like when you look at, if I'm an asset manager and I have nothing, no crypto on my balance sheet, or even actually if I'm an investor and I gave my money to an asset manager, and at the end of the day, I'm looking at the returns, even if the returns are good, I'm like, did you put any of my money in crypto? And if the asset manager says, no, I didn't, I'm like, what are you doing? Look at what it did, right? So I think there's also like a proof in the pudding in terms of the results and the returns that that's important. So yeah, I'm expecting a lot of shift. And again, I think that the next wave of institutional adoption and development is going to come from, you know, uh, yeah, from institutions and not from retail, right? Like crypto has always been driven, or a lot been driven by retail. And I think the next wave is going to be an institutional wave. I think it's already here.
I would say this cycle was like the first cycle
Yeah.
we've seen that's been led by institutions rather than retail.
Yeah, 100%. And but yet it's still like super tiny, right? Like when we talk about the 60 billion of BlackRock, it's a big number, but by BlackRock standards, it's like a drop in the bucket. You know what I mean? So they start saying, "Hey, you know what? I'm going to put like 10% in that space." Then it changes everything. So and I'm talking about BlackRock, and there's all the others. So yeah, I think it's a good time to be in the space for sure. Better than it's been the past few years. And it's a good time to be on the institutional side. I think there's a lot to come. There's a lot of really great ideas and concepts to build, and that's why we feel that and our space in there is really to be an enabler, and to really help facilitate the connection and to be this platform. And I think that we really play a very important role. And I say this, with humility and with the level of responsibility that we feel that we hold. But you do need that security, because I think that's when you build a house, you need strong foundations. And the security in trading is exactly that, a foundation. So we need strong foundations, and that's what we're trying to build.
Yeah, that makes sense. It's a noble goal. You said something really interesting about how like the regular traditional financial markets are becoming kind of like influenced by crypto, as demonstrated with NASDAQ. And then also we're seeing crypto like through investment vehicles like the ETFs kind of become financialized. So like the lines between them are blurring more and more. We've also seen asset managers famously talking about the coming tokenization of real world assets. Like what kind of potential do you see for tokenization as far as like Ledger's support for real world asset tokens that are about to start appearing on the scene? You guys have always famously supported a huge range of altcoins and ERC20 tokens and things of that nature. So like, how do you guys view tokenization that's coming?
I mean, we see it with a lot of excitement. I think definitely, I mean, we saw, and again, we'll talk again about BlackRock. I'm not, feels like I'm doing a big advertisement for them, but, I think it's great. But I think it's a lot of what they're doing is super exciting, and I know that Larry Fink is really like all in on crypto, and he's got a really amazing team internally working with him and working very closely with him. But what they did with Biddle and investing in securitized, etc., is a sign of what can be done, because it's real world assets, but it's also like tokenizing securities. Just creating more liquidity for a lot of things that are not liquid today. And so I think that's where things are going for sure. And in every single discussion that we have with asset managers, but and also what's very, very interesting is that we've been talking a lot about the US. If we had this conversation, 6 months ago, it would have been a very different conversation. And I would have told you like about what's happening in Singapore, what's happening in Hong Kong, what's happening in Dubai. But these guys are not stopping, right? Like it's not because the US is now back and it's going to start really like driving that what's happening in Asia, what's happening in MENA, and what's happening in other parts of the world, are not happening. And on real world assets, for example, there are a lot of really interesting things happening in Dubai. I was just there in January and met with a few companies that are doing very innovative things. It's really the I don't want to call it flavor of the month, because flavor of the month comes and goes, but it's definitely more where the next kind of frontier is. There are a lot of really smart people working in the space and coming up with very innovative ways of doing it. We are 100% here to support it, and we're thinking and talking to a lot of them to see what can we do. We worked with a few integration platforms in the past, but I think this was really like the beginning. And I think for 25 and beyond, we'll be doing a lot more in the space, because that's where customers, asset managers are going to want to go for sure. So I'm super excited about the space. It's definitely, if I had to write my three kind of things that I'm looking at, for the coming year. I mean, TradeLink is obviously one of them. Real world assets another one. I think a third one, which will be interesting, is in 2025. I think that we'll see a major U.S. corporation put crypto on their balance sheet. Could be Amazon, could be somebody else. I don't know. We'll see. But I think that when it happens, it'll be kind of like a domino, and a lot of them will do it. We at Ledger do it, and it's been good for us. And so I think that's another thing also that to see, and it's not really institutional, but it's kind of like linked to it one way or another. And it's also like a sign of like crypto being here to stay. And I think that when I think back about some of the discussions I was having with traditional finance people 2 years ago, and the conversations that I'm having now, a lot of them used to still say, it's a fad, it's going to go away, Bitcoin will go to zero. This conversation doesn't exist anymore. I haven't heard that from anyone, right? Like, everyone accepts the fact, at least for Bitcoin, that it's a real asset class, and it's an asset class to be reckoned with, and that actually has a real, reason to exist. And when we've seen everything that's happened with inflation, et cetera, we know that obviously that's the case. And so, yeah, we're coming to a different moment, I think. And what I liked in what you said is this idea that the link, like the ETFs being kind of traditional finance going towards crypto, but then crypto doing it also in one way or another. I think the way it started, if you look back, was that there was really this kind of like this idea of saying, it's crypto is the future of money, and that's it. And it's crypto versus TradFi, right? And I think now we're coming to this idea of saying, you know what? There's TradFi saying there's a lot of good things in crypto, right? The speed of the networks, the ease at which you can leverage it, the decentralization, all these different things. And crypto saying, well, you know what? Finance, traditional finance is not so bad. And, and ETFs are not so bad. And they actually are good for the ecosystem. So I think we're coming to this, agreement or way of like working together, which is really positive for both.
Yeah, I would agree. I think that's one of the most exciting things about this cycle so far, is like one that has been very, very different from prior cycles because of the fact that it's being led by institutions. And then second, that the traditional market and digital asset markets are kind of blurring together. We're running out of time, Sebastian. Is there anything else that you want to say?
I love the fact that we're running out of time, is that we were having a good time, right? No, I mean, yeah. I'll just finish by saying that, we're super excited to work with you guys, with Bitfinex, and we want to thank you for being part of like the journey from the beginning. It's been really great. And, we hopefully will talk, in a few months and have already like some data to share on how it's growing and how the uptake is, etc. And we just hope that outside of this, we keep seeing the industry growing and maturing, making the right decisions. But it's a really exciting time to be in crypto.
Yeah, I agree completely. Thank you so much for coming on the show and discussing TradeLink and Ledger's direction that they're moving in for 2025 with us. And how can people get in touch with you guys if they want to find out more about TradeLink?
They should go on ledger.com/enterprise, and there's a link right there. We'll probably also put it in there, but through our website they can get in touch with us. Get in touch with me through LinkedIn. I'll be happy to connect you with the team, or on Telegram. My handle is connected. My handle on Telegram, it's Sebadault, Sebadault.
Okay, perfect. Well, thank you so much, and it was a pleasure talking to you.
Same here, Ricardo.